Welcome to Nova Society. Protect your money because the banks are failing.
What if I told you that the banks you trust with your life savings are on the brink of collapse? Yeah, right now, all around us, hundreds of big U.S. banks are falling apart and your money is at risk. But there's a solution for those who want to safeguard their finances before the inevitable failure of these institutions. Today, I'm going to explain to you what's happening to the American banking system and show you how to protect your money before it's too late. We've all heard the whispers, another bank collapse, another bailout, another financial crisis looming. And with everything happening in the world right now, from inflation to higher interest rates to recession, it's hard not to wonder, is my money safe in the bank? In the past year alone, we've seen many established financial institutions collapsing in the United States. But what does this mean for you? And how can you take steps to secure your savings before things get worse?
Is my money safe in the bank?
Who knows? Do you guys think your money is safe in the bank?
You better safeguard your money.
With me, because by the end of this video, you'll understand the depth of this crisis and know how to keep your money safe. Society convinces us to trust our money with banks by making us believe they are the best option to keep our money safe. But something most people don't know is how fragile the banking system really is. Banks rely on a very delicate balance. They take your deposits, they lend that money out, and hope it comes back in time to meet withdrawal demands. But here's the problem. We've reached a point where that balance is breaking down. In 2024, inflation is squeezing millions of U.S. families and businesses financially, and that's causing loan delinquencies and defaults to surge. And what happens to banks when their customers stop paying their debts? They scramble. Oh yeah. The rising cost of living is also contributing to a decrease in personal savings rates at most U.S. banks as more people tap into their savings accounts, unable to pay their monthly bills. Behind the scenes, banks are struggling with massive debt and low reserves. The truth is, we're seeing signs of the same systemic weaknesses that led to the 2008 financial crash. According to Stanford University experts, the majority of banks in America are currently exposed to mass customer withdrawals and underwater loans. Those were the factors that caused the collapse of Credit Suisse in March 2023. The experts pointed out that the monetary policies enacted by the Federal Reserve have increased fragility of the U.S. banking system to the point that a substantial number of institutions are on the risk of failing should there be a run on these banks by uninsured depositors. That's because heightened interest rates have led to the most stringent credit standards and weakest loan demand from consumers and businesses in a long time, which has been hurting profits for banks. Meanwhile, they're dealing with other major challenges, such as the plunge in demand for office space as a result of home working. Given that numerous financial institutions are heavily exposed to commercial real estate, lending billions of dollars to the sector every year, the risk of mass loan defaults is putting many big banks in danger. In fact, this has brought the New York Community Bank to the brink this year. The biggest threat now is that economic activity in the U.S. deteriorates to the point that bad debts rapidly pile up and we hit another 2008-style liquidity crisis where banks become...
Do you need to safeguard your money and protect your wealth? Do you need to hold on to your cash and store it somewhere? Maybe Ethereum or Bitcoin or crypto. What are you going to do? Just living their lives, right? They're just living their lives, enjoying the economy. Meanwhile, they don't know the banks are failing, going down. Crazy, right? Or maybe it's all bullshit. Who knows? Let me know what you guys think.
Wary of lending to one another, and the weaker ones become unviable. That's why several institutions are already taking contingency measures. Have you heard of this? For instance, they have been shutting off customers' accounts that they consider risky and closing hundreds of branches to prevent people from withdrawing their funds en masse. Just a few days ago, the U.S. Sun shared a story of one bank customer whose account was closed without any notice. $5,000 went missing from his savings. Can you believe that? Ryan White trusted his money with U.S. Bank for over 22 years. He even had his mortgage through the bank. But in September, his account was suddenly closed. More than $5,000 simply disappeared from it. U.S. Bank, after 22 years, he said, decided to deny me over $5,000 of my own money in savings without reason, he wrote in a Facebook post. Is this legal? They, of course, still want my mortgage account. White said he'd made 5 calls and 4 visits to the bank without luck. I was just as nice as I could be, trying to figure out what's going on in person, though I was a little disgruntled. I was calm, nice, and cordial while explaining to them, he continued, adding that the bank's only response was that his account would be formally closed. No explanation, no money. I cannot pay bills, he stressed. Financial analysts explained that the financial institution may have analyzed White's debt history and credit score and considered him as a potential liability despite having $5,000 in savings. As they
Bro, what if that happened to you? All of a sudden you got over 5K, 10K, 20K in your savings account. You've been saving for years, putting money away, trying to get that house. Trying to get that house when Kamala's got a 25% capital gains tax.
Unrealized capital gains tax. That's gonna destroy the equity of your home by the time you try to pull out some
Money. What would you do if you had over 5K in your savings account and your bank just dissolved all your money, your account, your savings account, just gone, disappeared? Wouldn't you be pissed? This guy, I was trying to be nice as possible. Went to the bank, and still got nothing. What are you gonna do? I'm sure there's a lot of you that are watching this, or some of you that are watching this, that have money in your bank account, in your savings. What are you gonna do when that shit disappears? Are you looking into other options to store your money? Or are you gonna hold on to your cash? Are you gonna flee the country? What are you gonna do? Let me know in the comments. Very curious what you guys are gonna do. I know what I'm gonna do. Let's get back to the video.
They try to mitigate the potential impact of widespread financial losses. Banks are inducing more customers to start using online services instead of relying on their local brick-and-mortar locations. In that way, not only do they save on expensive real estate costs, but also reduce the probability of facing bank runs when local people come in. For customers, however, this means it'll get harder to take funds out of the system during emergencies or in the event of any of those banks falling under hard times. Just in the first 9 months of the year, U.S. banks closed more than 700 branches, leaving thousands of people without rapid access to vital services. Bank of America closed the most locations of any bank, shuttering 132 between January and September. U.S. Bank followed swiftly behind, having closed 101 of their own branches. Wells Fargo closed 92, Chase 90, TD Bank 52 in the same period. Now, the rest of the closures were conducted by institutions such as PNC, Citizens Bank, Woodforest, Fulton, and Capital One. Now, analysts estimate that if the current rate of closures continues for the rest of the year, more than 1,000 branches will have shut across the country in 2024. Although online banking may be helpful and convenient for many customers, something as common as an internet service outage can cut people's access to their savings for an indefinite period. On top of that, banks can restrict account access when they're experiencing some type of internal turbulence. A poll by Self Financial found that nearly 2/3 of Americans rely on the services of physical branches, and about 39% say they have more trust in banks with physical branches of real people than those without. Regardless of people's preferences, the migration to virtual banking operation seems inevitable. In other words, Americans are losing control of the money, their own money, they deposit at their banks, and the majority of them do not realize what's going on.
Now, in terms of banking, right? Storing wealth, storing gold, silver, bullion, whatever it may be, cash. I think it dates back, I don't know the exact date. The Templar Knights were the first order of storing wealth, and they guarded chambers of gold for kings, queens, and wealthy people. And I believe that's how it all began. Or some would say that it started with the Rockefellers or whoever.
So, how can I know whether my money is safe at my bank or not? That's the problem. You can't. According to the National Credit Union Association, 3,800 U.S. banks could be at risk of failure as collective unrealized losses reach $478 billion. That's the most recently available data showing that. But to avoid triggering panic among account holders, the Federal Deposit Insurance Corporation does not provide specific information on which banks are the most vulnerable. For its part, the Federal Reserve only admits that about 300 institutions are prone to failures. During its annual Bank Resilience Test, commonly referred as a stress test, the Fed revealed that 40 banks with more than $1 billion in assets reported unrealized security losses greater than 50% of their equity capital. More than 250 smaller banks have done the same. The data also revealed that the 30 biggest banks in the U.S. alone would lose $685 billion if a significant economic downturn were to hit the country in 2024. That's an increase of $144 billion compared to last year's stress test results. Fed Vice Chair for Supervision Michael Barr attributed the higher collective losses to the fact that banks have taken on more risk while incurring higher expenses. The higher interest rate environment we're currently in has made it riskier and more costly for banks to make loans, depressing their profitability. With many banks having exposure to losses from commercial real estate and unrealized securities losses, more banks are at an increased risk of having a liquidity crisis caused from withdrawals by large uninsured depositors, said Rebel A. Cole, Ph.D., then eminent scholar, chaired professor of finance in the College of Business. Now, based on an analysis of second quarter regulatory data, the expert found that 94 out of the top 100 banks with more than $1 billion in assets reported a 50% or higher ratio of uninsured deposits to total deposits. Those include the Bank of New York Mellon, which has a 100% ratio of uninsured deposits, 100%, followed by State Street Bank, 92.6%, Northern Trust, 73.9%, Citibank, 72.5%, HSBC Bank, 69.8%, JP Morgan Chase, 51.7%, and US Bank, 50.4%. We must remember that the first bank failure of the year, Republic First Bank in Pennsylvania, was number 87 on the previous quarter's list with a 51.5% ratio, Cole pointed out. All of the banks on this list are at a serious risk of a run by uninsured depositors should they exhibit any weakness from commercial real estate exposures or unrealized losses on securities, the expert added. Even though regulators and the Federal Reserve are aware of this issue, they are not taking significant steps to prevent the banking crisis from worsening. Dennis Keller, the co-founder, president, and CEO of Better Markets, argues that despite the acute fear of systemic risk that gripped the nation has spurred federal banking regulators to employ a systemic risk exception to protect the banking system from contagion, little has actually changed in the last year. Saying just 1 year ago, Silicon Valley Bank, Signature Bank, and First Republic Bank failed, caused a banking crisis, and got bailed out by taxpayers. These were 3 of the 4 largest bank failures in U.S. history, and directly cost Americans more than $30 billion in bailouts, but really cost much more due to contagion, credit, contraction, and as much as 1% of lost GDP, he wrote. Our financial system, our economy, and the American people remain vulnerable to mass bank failures, the executive warned. Most importantly, policymakers need to act now with as much urgency to prevent the next crisis as they do when bailing out banks when a crisis hits, Keller has emphasized. This regulatory failure is inexcusable. Regulators bailed out the banks in 2023 with tens of billions of dollars in a matter of hours. But even now, more than a year later, there have been no concrete material changes specifically addressing the causes of the crash, he noted. Unfortunately, there's still a lack of accountability from regulators and no plan of action to prevent a future crisis. That's why average Americans should take action now to protect their hard-earned money. So, let's get to the part you've been waiting for. How to safeguard your funds from the ongoing banking crisis. Look, there are some easy steps you can follow right now. Step 1, diversify your savings. The first thing you need to do is diversify. Don't keep all your money in one bank account. Don't keep all your eggs in one basket. Spread it out between different banks and consider alternative financial tools like credit unions. They often have higher levels of stability. Step 2, build an emergency cash reserve. Yeah, an emergency fund that's not tied to any bank. This means keeping a portion of your money in cash, obviously somewhere safe. In times of crisis, banks may freeze withdrawals or worse, make your savings disappear. Step 3, explore secure investment options. Yeah, don't rely solely on banks for savings. Consider investing in more secure options like gold, inflation-protected bonds, or even real estate, which can often hold value better during financial crises. Now, these are simple measures, but in times like these, they can be the difference between financial security and simply losing it all. What do you think? The reality is, the cracks are already showing in the financial system.
So what do you think, guys? Are the cracks showing in the financial system? I think so. I believe that it is. I've seen a multitude of reports on banks that have been crashing ever since COVID-19. Invest your money into you, essentially, and spread it out. Now, I'm not a financial advisor. I'm not certified, so please do not take any of my advice as financial advice for your personal finances, okay? This is Nova Society, and we're here to explore a better way of life and success for all of mankind, entrepreneurs with no limits. Please subscribe to the channel, like this video, and leave us a comment. I'd be glad to hear what your thoughts are. Peace.